Hey y'all, this is Audra Hicks, your Tennessee real estate professional. I wanted to go over the settlement statement with y'all today. So please don't forget to hit that subscribe button and stay tuned because I put the real in real estate. Okay, y'all, I just wanted to go over the settlement statement and what you might find on the settlement statement. Now, this is something that when we are getting ready to close, our title companies usually send over to us real estate agents the settlement statement. We call it the ALTA, the settlement statement, the final closing statement, whatever it may be, to have us look at it on with another set of eyes to make sure that everything looks good credit and debit wise on the selling side and the buying side. So the sellers have different fees that they will pay or not pay. Some things will be credited from the buyer to the seller. Some things will be credited to the buyer from the seller. So in accounting, you have credits and you have debits, and who is paying which one. Sometimes the buyer pays for a lot, sometimes the seller pays for certain things, or say the seller is going to pay for up to a certain amount in the buyer's closing costs, prepaids, title expenses, things like that. Sometimes they are paying up to a certain amount in the buyer's prepaids and closing cost, but they may be also paying now in there some of the buyer's agent's fees, if that's been negotiated from the buyer and the seller. On that part, it could be also that the seller is not paying title expenses for that buyer, or they are paying over and above what they said they would pay. They're also paying lender's title policy, owner's title policy, things like that. That is all spelled out in the contract. So who is paying what title expenses is either or. It could be either or paying it. It could be the buyer paying for all of that. It could be the seller paying all of those fees. Plus, they all have their own closing fees that they pay to their title companies at closing. So every title company is different. Every settlement statement I see, every title company that we deal with is different. We have what we call split closings here in Tennessee. So we usually have two different title companies, one for the seller's side and one for the buyer's side. Sometimes they all use the same title company, but in some of the clients that I have, that they think they're going to closing with that buyer, or the buyer thinks they're going to be sitting at closing with the seller, and that doesn't usually happen. So you have, us agents set up our clients' time to close. Sometimes people work during the day or they're off certain times and they can only close at 5 o'clock, or some can close in the morning, some can close midday. So we're all different and every closing is different. So I wanted to go over a little bit about a settlement statement and what is included in a settlement statement too. So initially you're going to have how much the sales price of the home is. Say it's a $500,000 house. So you have that as a credit on the seller side and as a debit on the buyer side, because that buyer is actually giving $500,000 for that home. Minus out what the loan amount. The loan amount may be a lot different because we have all different types of loans. So you may have zero down payment. You could have different types of loans that are the zero down payment. They may not be putting anything down per se on the home. So it will be the $500,000 is the loan amount. Could be that. Could be a little bit over that. But it could be $400,000 that their loan amount is for on that $500,000 house, because they're putting down $100,000. Who knows? If you're doing an FHA, it's usually 3.5% down. Some people put down more with FHA. Some put down, I've seen 20% even. So you don't all have to pay 20% down to buy a home, and it depends on your loan type. That is all explained to you through your lender, or should be anyway, on what you need to be bringing to closing. Everybody's different. All their credit is different. Their circumstances are different. What their payment is going to be, sometimes it depends on what they want as their payment, as far as what they put down on their home too, to get it there, and if they're paying any points or anything like that to pay down their interest rate. They may do that up front. So I'm going to go over the different credits and debits that you might see on a settlement statement. Now, in accounting, we do have debits and credits, so it's either or on one side or the other. So, is the seller going to pay any of the closing costs, prepaid items for the buyer? That's going to be debited from the seller and credited to the buyer. So, say your seller said that they would pay up to 3% of all of it, whether it's going to be their closing costs, prepaids, could be something to do with the buyer's agents, commission, fees, whatever it may be. May not. Seller may not pay for any of that, depending on what they're doing. But all of that will be spelled out later on in another section of the settlement statement. So it could be that they're paying up to a certain dollar sign. It could be a percentage, and it could include any title expenses that are to be paid for the buyer. The seller may pay those in the X amount that they have said that they would pay up to. Sometimes if it's written up in the contract to pay up to X amount for buyer's closing cost and prepaids, but it doesn't specifically say anything about the title expenses on that line, then in the special stipulations, then it may be that the seller has agreed to pay over and above, lender's title policy, owner's title policy, or one or the other, or whatever it may be that they have agreed. But whatever is in that purchase and sale agreement will be outlined here in your settlement statement. So you're going to have assessments like your city and your county taxes. Sellers end up paying from January 1st through whatever the date of closing is, and it'll be prorated on their taxes. So whether they have city taxes and county taxes, or both, or one or the other, the seller is responsible up until the day of closing for those. The buyer is responsible up until the end of the year after that. So you'll see debits and credits for both sides on those. There's going to be loan charges if the buyer is not a cash buyer. If they are a cash buyer, the settlement statement will not include anything to do with a loan. So it'll be a lot shorter in the settlement statement. Probably a lot easier to read. I know for my cash buyers, when they have bought in all cash, it's like, wham, bam, here we are. We are done. Like, there's not a lot to be spelled out in the settlement statement there. So if you do get a loan, here's a lot of the different fees that might be in there, depending on your loan type now. So you're going to have your loan amount, of course. That's after whatever the sales price of the property is, minus your down payment that you have already figured out ahead of time that you're going to be bringing. So it might be $400,000 now that you are going to be having as your loan amount. Then you're going to have your loan points. If you have paid maybe 1%, 2%, whatever it may be in loan points, that is going to be spelled out there. That could be $10,000. That could be $5,000. Who knows? It just depends. Everything's different. You're going to have underwriting fees, wire fees to the title company. If there's an appraisal that happened, then it's going to show if it's already been paid before closing, or if it's going to be paid at closing. A flood certificate, credit report fee. If you have MIP, your mortgage premium, insurance premium. If you have your government loans, your FHAs, you're going to have that the life of the loan until you get it refi later. Let's see. Prepaid interest, things like that will be included in there. If your lender will be escrowing your insurance and taxes, then you're going to have maybe a 2-month reserve, 3 months, 6 month, a year, whatever it may be, of those that you will bring to the closing table. We say bring to the closing table, but up front, there's no cash to be brought to the closing table. We don't do cash when we buy a home. Even though it's cash, you wire your funds to the title company usually the day before, sometimes the day of, over to the title company. When you're a buyer, you wire those funds over there. We don't bring cash or a check to the closing table, but we all just say closing table. There's going to be government recording and transfer charges. They can be expensive, maybe not. Any real estate commissions or fees come out, and who's paying them? Like, you could have the seller paying for both. You could have the seller, it may be that the buyer's paying for some or all of their buyer's agent's commissions, and the seller is taking care of theirs. It just depends what y'all have both negotiated on either side there. And these days, it needs to be, negotiated from the buyer through the contract to the seller if they're needing this or asking the seller to pay any of those. And then it gets negotiated, whatever it may be. And then sometimes the buyer ends up having to pay that, but, we're not philanthropists or anything. So, that up front. When you have your buyer's consultation and you go over everything, that up front. You're transparent with everything on your listing consultation. Between you and your client what your expected fees are. So everybody knows. Let's see. Title charges. So you have your lender's title policy, your owner's title policy, things like that, and who is paying for that. Those can be quite expensive too, depending on the price of the home. Then your closing fees. So, your title company is going to charge closing fees as well. So you'll see both sides of those. Miscellaneous charges. Now in here, this can be, it could be taxes. It could be HOA fees too. Anything, the homeowner's insurance premium for the buyer could be in there, HOA fees and transfer fees, things like that. It could be liens and judgments on either side. If a seller has a lot of liens and judgments, I've seen that before, where they have to pay that and it has to be paid at closing or figured out. Do you owe it or do you not? You need to figure all of that out before closing. So then it comes down to what is due to the seller and what they walk away with and get wired into their little checking account or savings account or wherever they want those funds to be sent to. And then you're going to have over here on the buy side what the buyer is bringing as their down payment on the home. And that includes all of the other fees, not just their down payment, but their closing cost and all of their other fees that they're going to have to bring to closing. So it could be 3%, 3.5%, 5, 10, 15, 20%. It could be half. It just depends. Everybody's different. Everybody wants different payments, different interest rates. So it depends on, if they've bought down that rate at all as well. So hopefully this has helped you today. And if it has, please don't forget to subscribe and share this with your family and friends. And I will see y'all next time. Bye, y'all.